Right, hello everyone, and we are at the end of another kind of strange week in financial markets. A bunch of stuff has gone on, and half it has got nothing to do with this calendar. We'll jump across. First things first, the RBA, the central bank out this week was the RBA with their interest rate decision. They did hike interest rates by about 5%, 50 basis point. Which was to be expected. You can see here market consensus and forecast was for 1.35. We could then come into 1.35. So, they stuck to what markets initially anticipated, but they did let down a little bit in their statement once they had moved on from the actual rate decision. Essentially, they noted in their statement that they did not speak about the 75 basis point hike that some market participants thought they might get, but they did in fact speak about a 25 basis point hike, and they think that they are approaching, they think that they are starting to have done enough to start to get this inflation problem under control in their country, and that is definitely interesting going forward. If they're not talking about coming in over the top in terms of hikes, if they're only talking about potentially under delivering on markets expectations, that is definitely interesting going forward. Didn't cause massive moves for us off the back of that initially, off the back of that movement itself, but remains to be seen going forward. Do we get a 25 basis point hike at the next meeting, or do they start to cool down hikes? We'll have to wait for some more forward guidance and wait for the data out of Australia to make another decision on that. Apart from that, though, we had the minutes out on Wednesday. We had the minutes out of Fed on Wednesday. Again, not a great deal has come out of that minutes. Not a great deal has come out. The minutes are still talking about the hikes. They are still talking about 50 basis point, 75 basis point. They do think 75 basis point will be appropriate at the next meeting, potentially September. Then 50 basis points in September. That's the kind of chat that we've had out recently out of the FOMC. We can get 75 next month, 50 then the following month. Does that mean we're finished then, or does that mean we start to wrap up these rate hikes for this cycle? Remains to be seen. But yeah, not a great deal out of that sort of stuff over the course of this week. We had a few other data points. We do have non-farm payrolls today. Do have non-farm payrolls out at 1:30, and that could prove a catalyst for some strength or weakness. We'll have to see. But in my opinion, I would normally, on today when NFP's out 1:30, I would record this video later. But I personally don't see there being massive interest in NFP later on. The fact that we've got inflation next Wednesday, I think markets are going to be more concerned about what happens with inflation next week as opposed to NFP today. Obviously, if you can get both strong or both negative, then that does help. That plays into Wednesday's thinking. But do we get a sustained move into Wednesday off the back of NFP? I don't know. We could definitely get a spike today, get a movement today, but I think Wednesday of next week takes center stage. Apart from that, though, we're onto the charts. And what we've seen over the course of this week is a little bit of a bounce back in kind of risk assets, right? We saw over the course of the last 3 days on the spin, we did 3 up days on the S&P in a row. Come back to Bitcoin, we've had 4 up days in a row on Bitcoin, right? Monday was no trading in terms of the S&P. Bitcoin just trades all the time, but this base that's starting to begin, that's kind of forming down at this 20,000 round number. Some people will actually view this then as a double bottom, which is a known bullish kind of reversal pattern breaking out through the neckline towards here. If we can get a breakout of that over today or over the weekend, that would be nice. That would signal some bullishness and would probably signal a near-term base in something like the likes of Bitcoin. We can see, as I said, the S&P 500 has posted 3 bullish days in a row. We are also, this little level down here, again, not the best of levels, but on daily time frame, 5 rejections in a row off the round number at 37.50. You can see it there. You can see my little numbers. That is 37.50 there, and that is definitely, definitely some positivity that we've punched off of. Ideally, I would want to see us break through a high like this to really signal further upside. If we get through that, I think we could see more of a bounce back. Maybe tag the highs up at 4,200. Maybe worth a punt. But I think the big news over this week is a little bit closer to home. As we look across here, we'll start with cable. Obviously, cable. Nothing got to do with the calendar. Boris Johnson has resigned. Boris Johnson has quit. He is gone, and that was to be expected. But after he had a bunch of ministers leave during the week, he sacked one of the ministers, Michael Gove, and he's now had to go and then resign himself. I think he was obviously put under pressure by his party themselves and obviously by the public, and it just all got a bit much from him. But I'm not going to comment too much on that. He kind of made his own bed, I think, a little bit on that one. But anyways, we have not seen much of a reaction off the back of that. If we zoom in here, this on the daily time frame, see we failed to break this low down here. We're failing at it. This is around the 120, so a big round number, big psychological round number that we are failing to kind of have any sustained move below. And yeah, we're failing to break to new lows. We met with a bullish engulfing yesterday, big daily bullish engulfing candle yesterday. So we did see a bit of positivity around sterling yesterday. Sterling was bid yesterday throughout the day. Not a massive movement. I mean, that one candle doesn't really change the bigger picture. Do you know what I mean? Then we've moved back lower today, but that is likely to do with ongoing dollar strength. If we're going to look for a bit of sterling strength off the back of that, we would probably prefer to pair sterling with something else. But across the board on sterling, we've not seen much of a move, so we'd want to see some higher lows probably established across some sterling pairs before really going and trying to act off information like that. I think the fact that it's not going to be it's not the party, it's not Conservatives against Labour, it's Boris Johnson. So the Conservatives will just elect a new member, a new leader of the Parliament, who will then become Prime Minister. And we'll have to then see who that is, but the fact that they will be a Conservative, they are likely to share similar kind of ideas and viewpoints. Yeah, they'll have differing opinions on some aspects of things. Absolutely, everybody disagrees on something, but the fact they are from the same party, largely they will probably share similar major viewpoints. But remains to be seen how that plays out going forward. But yeah, positivity yesterday, not been followed through today. Remains to be seen how that plays out. But I think the main focus of attention for everybody in markets is going to be the euro, going to be the dollar, and this just keeps marching lower. If I blow this up again, we're looking at this big level for ages on euro dollar. This level down at 105, it's a big monthly level, and we have well and truly broke through that this week. We've continued lower with a pretty strong break, and then continued lower, and we are really approaching parity. If I get that, just get a bang on the level. Let's change the color there so we can see it. That's the round number of 1, the parity, the big figure in euro dollar. Do we tag that today? It's 120 pips off. That's a little bit way off it today. Does this NFP give us some juice to get down there? Remains to be seen. Does that wait till next week? But I think we will be approaching parity on euro dollar at some point over the next week. I just hope I am at my screens to see it. But does that break first time, or does it fold? I mean, the sensible thing to do would be to try and buy it off 1, wouldn't it? But that would be probably market consensus, or the kind of market's viewpoint. Being a contrarian in markets is not always a bad thing. Obviously this trend is firmly established lower. You don't want to be going and buying the thing any sort of long term, but is it worth a punt? 1% risk off 1? It's a couple of hundred, 2, 3, 400. Even a kind of anywhere back towards 105 would be a solid move, and could we get that off 1? Remains to be seen. But also, it is, the Eurozone is not in a good place. The ECB are not in a good place at the moment. There's a lot of troubles, especially with all these sanctions that they have introduced in retaliation to Russia. That is causing obviously a drag on the European economy. There's a cost of living crisis, there's a gas crisis, energy bill crisis. A company in France, is having to be, being talked about being bailed out. A big energy company. So if that starts to happen across the globe, there's talks of people in Germany, not having gas to heat their homes over the winter. So if that starts to happen in multiple countries, obviously that's a negative. But with interest rates already at 0 in the ECB, they have got no room to really cut them. So they are in a pretty difficult situation, especially with inflation at 10.2% in a country like Spain, and then it's was it 4.8 or 5.8 in France? I can't remember off the top of my head. But that's half the levels of inflation in France and double the levels of inflation in Spain. Those two countries need different monetary policy settings, but the ECB are the ones that set it, and that is troublesome. That is troublesome for them. But if they do need to cut going forward, they've got nothing to cut, which is difficult, and is, in my opinion, the reason for this move lower, and it shows no signs of slowing down anytime soon. The little technical bounce off parity would be nice. Would be nice for a little short-term trade, but overall that's not going to change the trend unless something fundamentally changes about this, I think. But that is, the writing seems on the wall for parity, doesn't it? maybe not today, but I think over the course of next week we can expect to see that. I think gold as well, another thing that I was looking at, we had a big level fold on gold as well. We've been in a long-term downtrend since, gone back since March, but clearly printing lower highs and lower lows, and we've printed fresh lower lows over the course of this week. We have this level across here that we've been looking at for a while. A few touches in through here, touch here as well, just before we broke, and we smashed through it pretty convincingly over the course of today. I think the next port to call in terms of kind of support levels is probably down towards here. And it's a good, 70 odd dollars away from current price. So definitely a bit of room for some trades on the way back down. You'd probably expect it to tag maybe down towards those sorts of lows, and then we will see what happens in due course. But yeah, I think selling rallies on something like gold is not the worst of ideas. Apart from that though, 10-year yields, a lot to go through, but 10-year yields back at 3%. We broke below it back end of last week. We've come up and now we are retesting the 3%. Can that hold into the close this week? Can we move lower, get somewhere back towards 2.9 and hold below 3%? I think that will be significant. That will probably prove supportive for risk assets, things like the S&P, things like Bitcoin, and that will be something I'll definitely keep an eye on into the close today, and also heading into next week. Speaking about next week, I already spoke about inflation next week. We come around to the calendar over the course of next week. We do actually have the RBNZ out next week. As you can see, I have to get the medium impact. We got to get the medium impact back on. You can see that here. RBNZ interest rate decision Wednesday 3 a.m. What we are expecting is another 50 basis point hike out of the RBNZ. They got the highest interest rates in the G8 at the moment, so that is set to continue as of next week. Apart from that though, speaking about inflation, we got inflation next Wednesday 1:30, big day of the week next week 1:30, as we got the Bank of Canada a couple of hours later as well. So two central banks next Wednesday, two central banks next Wednesday, inflation, as well as then I'll just get it back to the high impact for a second. I changed the wrong button, but yeah, we got some GDP out on Wednesday as well. We got inflation, we got the Bank of Canada, RBNZ, GDP out of UK, I said, sorry, and then unemployment out of Australia, which is not the most common of figures in Australia. They do say, the RBA say that the unemployment situation is good in the economy, so strong employment hopefully cause some upside in the Aussie dollar. Or the flip side, then something like that with the comments out during the week this week, with them mentioning that they're starting to get a control of inflation and that sort of stuff, that shows a kind of maybe a potential reluctance to continue to hike rates aggressively. If they're talking about a 25 basis point over a 50 or over a 75 basis point, if you get some weak unemployment numbers here, that could accentuate that dovishness from this week. But yeah, bit of a long one today, a lot to cover. I nearly forgot something. The former Japanese Prime Minister has also been shot. He was speaking at an event over the course of this morning, 6 or 7 hours ago. He was shot. There's obviously reports then that the current Prime Minister has suggested that he is not in good condition. He's unresponsive, unconscious, in hospital. So that's the information we have at the moment. That's not good. Bit of a crazy set of events to wake up to this morning, but that is the strange world of financial markets. Yen a little bit higher. Off the back of that, but no great deal of price movement whatsoever. But yeah, that's it from me then, folks. Bit sunny today in London. It's supposed to be 28 degrees or something. We're supposed to have a nice weekend, so hopefully get out and about and enjoy some sun, enjoy some fresh air, have some rest and relaxation, ready for another week of trading next week. But yeah, that's all from us then for this week. Bit of an interesting week. Hopefully next week is the same, and please do join us again next Friday for another weekly market insights. Thank you.